Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Certainly the US market still seems to be on track to sort of test record highs. The market is sort of pushing on really on the back of some pretty reasonable earnings after the second quarter. Potential as well for another sort of stimulus package coming through, but also as well some pretty reasonable headway being made on vaccines. Interestingly, Russia apparently has announced the first vaccine for COVID. President Putin was pretty keen to get that out, be sort of ahead of the pack, first in line, and just going to be very interesting to see how that sort of plays out over the next sort of couple of weeks. Now that added to the fact that certainly in the southern states as well, the rate of infection appears to be sort of waning, and certainly they seem to be getting under control. And they say the increase in cases now is starting to fall. Certainly doesn't mean out of the woodwork yet, but looking at it, it appears to be getting more in controllable state. Market was also helped by some pretty reasonable employment data as well. New jobs created was just over 1.8 million compared with about 1.5 expected. So that sort of all helped to give a reasonably sort of good underlying bid out there. And certainly most of these sort of fund managers as well still feel there is some pretty good value out there, especially in some of these companies that have been really pretty badly beaten up and sort of down 30-40% from their recent highs. Interestingly, in July, global equities were up 3.3%. Just interesting to see how the world is sort of changing, sort of post-COVID. Nike, one of the major global brands around the world, saw more increase in the digitalization and online sales in the last sort of 4 months than they've seen in the last 10 years. Now, so that's quite interesting, because when you have an organization the size of Nike that really has a global footprint, to see those sort of numbers coming through really is pretty amazing, and potentially shows the way forward as well over the next sort of 3 to 5 years. So obviously on the back of that renewed optimism, oil is still holding a pretty reasonable bid, just about 41 bucks. The UK obviously got to deal with COVID, but also as well it's sort of seemed to be forgotten about that Brexit is still sort of rumbling along in the background, and that's going to take some pretty tough negotiating, and potentially it's still going to have to be extended a little bit further as well due to COVID. Europe has seen a little bit of an increase in cases in sort of Italy and Spain, and again, just being sort of very wary as those borders have been reopened. Victoria, Australia, cases appear to be sort of waning just a little bit in terms of the rate of increase. Unfortunately, there have been a pickup in deaths. Most of those have been in the elderly sector, and that unfortunately is one of the consequences of this virus. It does impact the elderly quite severely. But it's certainly going to be pretty tough next sort of 5 to 7 days for Victoria, and if they can sort of break the sort of back of the virus, then potentially they can see a little bit of light at the end of the tunnel. Here in New Zealand, just as the major parties sort of cranked into the political campaigning, the economy has been hit with a sort of move to level 3 lockdown in Auckland. The rest of the country moves to level 2. Now, Auckland is on the back of 4 new cases coming through that they can't really find any reason why they should have the virus and potentially as community transmission. So that's going to be for the next 3 days in Auckland. I suspect it'll be a little bit longer than that. I can't see how you go from level 3 to level 1 in the space of 3 days. And certainly the government will come under quite a bit of pressure now to explain what has happened in terms of its sort of testing and sort of COVID lockdown regime. But certainly for July, it wasn't too bad for New Zealand equities, up around 2.4%. But really, the case out there is still, a major issue for investors who are looking for income. Certainly term deposits and bonds really aren't providing much in the terms of returns. You're looking at bonds at around sort of 5 to 7 years at around a sort of 2.2 to 2.5% as a gross return. Recent bond issue of Wellington Airport, and potentially Investor have a potential bond in the marketplace as well. So if you are looking for income options, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.